for today's stock of the day, and it's this trade desk. And
Ooh.
the reason why is because look at a couple things here. Let's just look at how clear this level it has gone to, or is getting close to, I should say. I mean, I would give it a couple more dollars. It's at 82.20, and we'll call this. What will we call this? We'll call this 67.50. I mean, we don't want to get too precise, but just for argument's sake. So this particular price level was resistance way back here in December of 23. Then it became support. Then it became support again on this sell-off, and now there's a good chance it might become support again. Markets tend to find support at levels that had been support before. So if something is going down and you're wondering, hey, I want to buy this thing, but where should I buy it? I don't want to catch the proverbial falling knife. You can look and see if it's getting to a price level that had been support before. There are people that sold right at the bottom that regretted doing so when the thing blasted off soon after. And they tell themselves, if I could ever buy my shares back at the same price I sold them at, I'm going to. So as a result, when we fall back to a level that was support before, if you have enough of these remorseful sellers placing buy orders, it can create support at the level that had been support. And now this is seller's remorse manifested in a different way. It could also turn what was resistance into support. People sell here and the price goes lower and they're like, oh, this is easy. But then eventually the price goes higher and they say, I made a mistake. If I can, I'm going to buy my shares back at the same price I sold them at. So you can see here how a thing or a dynamic of investment psychology, seller's remorse, can make what was resistance turn into support and keep support intact as well. Now, I'm going to do something that I usually don't do, but sometimes I do. If you go type in a company symbol, in this case it's TTD, and then space IR for investor relations, it brings you to their investor relations page. So I went to look at the earnings, and I don't know why this stock fell unless I'm missing something here, because these earnings look really good. I mean, look at their net income margin. It increased from 16% to 25%. This is how much a company makes after all said is done, after all expenses are accounted for. So a 16% margin means they make 16 cents on every dollar of sales. They've increased that to 25%. I mean, that's a huge, huge increase. That's a 50% increase, right? Up to 25%. So that looks really good. The earnings have almost doubled. So in the fact that we're getting close to this level that was support, we're oversold. We probably had really big volume. And sometimes big volume at the bottom of a trend or at the top of a trend could be a bullish signal, because what happens is people that want to sell, they're watching it go lower and lower and lower. Finally, the news comes out and they're like, this sucks, man. I'm just going to go sell it for whatever price I get. I don't care. And that makes a lot of volume trade. So now if people start going through the numbers and they say, these numbers aren't as bad as we initially thought, let's go buy some. They're going to have a hard time finding someone to buy shares from, and they might have to push the stock higher to do so. So I'm watching this for a rebound. So that's going to be today's stock of the day.
Okay, so a couple of things here. First of all, I love this. I actually traded the trade desk not long ago. It was at the end of last year on a possible break from 100. It ended up running like crazy. First of all, this reminds me a lot of the EA setup that we just saw, right? You did a lot of the same thing. You looked for some support. The stock traded down to support. It bounced pretty well. I actually cleaned up on that trade. It reminds me a lot of the same type of setup. The other thing that I wanted to ask you, unlike the EA trade, which actually printed that 115 support, the one that you had just drawn there, the price was not quite down there. So here's my question. When you see something like this, is there any sense in maybe nibbling a little bit and taking a starter position here just to see if it does come into that 76.50? And then if it just V bounces from here, at least you have some exposure in it.
Well, everyone has their own style, right? So there's really no right answer. Me personally, I would wait for a reversal to start. I'm not necessarily waiting for it to get all the way down to here. I mean, this is pretty close if you consider the magnitude of what's going on here. But just because my style is, if I'm going to trade this as a reversal, I would maybe consider, all right, you know what? if we clear yesterday's opening price, 85, that's where I would jump in and maybe take a full position. Because just because something is down and it's oversold doesn't mean it can't keep going lower. And, I don't claim to be a fundamental expert. Maybe there's something in those numbers that I'm missing, but they look pretty darn good to me.
Mhm.
And one thing I will say is, we had this big sell-off yesterday and it's not continuing through this morning. So something that's really going down, what does it need to do before it starts to go up? Well, it needs to stop going down. And let's take a look, let's look at the 1-day chart from yesterday and see if we can identify a particular price level for people that have a higher risk tolerance. Like I would say, all right, if I was going to maybe day trade this is yesterday, right? So like 84. See how there was resistance at 84?
Yep.
I would maybe wait for this to clear 84. So maybe if it gets to 84 and a half, that's where I would jump in. And, it's not about catching the exact bottom. I think people get a little bit too caught up in being precise, but it's not really about being precise. It's about, it's about making money. And I tell people that I think it's a good thing to do is to have like an Excel spreadsheet set up or, watching your brokerage account and just focus on the equity. And if that equity is going up and if it's up 1 or 2% a day, you're going to be a phenomenal trader. I mean, people can't overestimate what a great return is, but 1% a day over the course of a year. I mean, think about that. That's like, phenomenal. And I think if people are just focusing on that, it makes the mindset easier to stick to your strategy and not let your emotions make you do things that you're going to regret. But that being said, everyone has a different strategy. Someone might look at the numbers and be like, you know what, these numbers really are pretty good. So I am going to start trying to dig in here because guess what? If someone comes out and upgrades the stock, this thing could blast off. So maybe I do want to get a little bit in.